So tonight we are going to be looking at TDA. TDA is top-down analysis, and SMT is basically just divergence or smart money tool or smart money technique, whichever one you are fine. Just don't complicate it, alright? So that's the meaning. So we are going on top-down analysis. And sorry guys. So top-down analysis. Let's start with top-down analysis. So when we talk about top-down analysis, then we are going to be looking at top-down analysis. I basically also talks about order flow, right? Order flow. So that will be 4 hours, strictly looking at the 4 hours. So 3 minutes or 1 minute, whichever one is fine. Sorry, I'm just trying to get my mind together. I have a lot of things for dreaming, but I'll be fine. Alright, so in my notes here, there are 9 things I wrote about, 9 things I look out for when I'm doing my top-down analysis. Sorry, hold on, guys. All right, sorry about that. I had to get the noise out. So I wrote here 9 things I look out for when I look at my top-down analysis. I'm going to be sharing 3 of the 9. Yes, I'll leave the remaining 6 for the master class. So 3 of the 9. That means one of the, and don't think maybe because the remaining 6 I'm not sharing it does not. I mean, even out of the 6 I've shared like 2 already. That's the Asian range and the weekly highs and lows. But then we are going to be looking at time of the day. We are going to be looking at PDRA. That's premium and discounts. PDA is premium discount array. In fact, I feel like you even start with premium discount array because that's one of the main things I want to really emphasize on. Premium discount array. And then lastly, I want to look at days of the week. Days of the week. Days of the week. All right, you'll get the idea pretty soon. You get the idea. So remember, just follow me, all right? Just follow me. You get what I'm trying to do. All right. When we look at PD array, let me bring out PD array to this place. And remember, I said PD array is basically what? Premium and discount. Premium and discount. So let's put here premium. Did I get that right? Premium, yeah. And discount. Text. Premium and discount. Now, remember that when we are trading the smart money concept, or we are trading generally, we are looking at buying at discount and selling at premium, right? We are looking at buying at premium, buying at discount and selling at premium, right? Now, at premium, there are specific things we are looking out for. At premium, there are specific things we are looking out for. Now, this is coinciding with when you're doing your top-down analysis. Don't worry, when we get to the chart, I'll show you everything one after the other. But I want you to focus on this one now. Now, when you get on your chart every day or every week, you're starting off on your 4 hours, keeping in mind your weekly and your daily profile, right? On your 4 hours, you are looking at the last higher highs and higher lows and the last lower highs and lower lows, right? That's your trading range. Of course, everybody knows what the trading range is. So at that premium, you are looking out for specific levels. One of those levels is your previous H4 highs. And I'm going to be writing a whole lot of stuff. Your previous H4 highs. All right. Sorry, hold on. My network is misbehaving. You're looking at your H4 highs, all right? You're looking at your previous daily highs. And I think the word I should do here, previous daily highs. There's a reason why you're looking at all of these things, all right? Your previous daily highs. And please, if your mic is on, can you help me mute? Thank you. You are looking at what else? You are looking at your previous week's high. That's your highs. Someone's mic is on mute. If your mic is on, please help me. The previous week's high. And then you're looking at your what? Lastly will be your previous monthly highs. Your previous monthly highs. Now, when you are now looking at your discount, you are looking out for what? Your previous what? First will be your previous H4 lows. All right, I think I can just do this. Your previous daily lows. You are looking at your previous weekly lows, and then you are looking at your previous monthly lows. So you can put this as, because a lot of people, when you start using acronyms now, they start getting thinking you are doing something interesting. Oh, this is previous week's low, right? This should be previous day low video, and then I can just leave that like that. So in your discount, you are looking at this, you are looking for these stuffs, and in your premium, you are looking for these stuffs. Now, the reason why you are looking for all of these stuffs is because they represent liquidity points in the market that price is likely to react from. More often than not, they react from these areas. Do you understand? They react from these areas. So you want to mark this place out. If you have seen my chart most of the time, you always see me marking out all of these areas. Like when I'm doing my top-down analysis, for instance, now let's bring up something real quick. Let me look for one real quick. Where is that one now? I'm coming, just a minute. All right, I think I've seen one. All right, if you looked at this, my DXY for last week, you can see how I marked out this previous week's high and previous week's low. And I do this a whole lot. And then you see all this buy side liquidity that you normally mark, buy side liquidity, sell side liquidity. Now, most of those things are just basically what? They're just basically the previous week's high, previous week's low, previous week's previous daily highs, lows, and all of that. Now, why do you need all of these things? It's because there are actually areas whereby price are drawn to, where you either take your entry or you take your take your exit. It's either the place whereby, remember that the smart money concept, because I've been thinking about this a whole lot. Remember that when price is moving like this, when price moves like this, right? Now, this might be an area, let's say a previous week's high. Now, to a retail trader, this is what? This is like, is it a support or a resistance again? I can't really remember now. But this is like a demand zone. Is it a demand or a supply zone? It's been a while I've done that. But whichever it is, now they will be looking at taking their trades here. But remember that it is at this high that we were expecting to get that break of structure for price to do what? For price to then generally reverse. Do you understand? So you are waiting for price to take out these highs. You understand? I know there are a lot of times whereby some people probably, let's say, they are looking to take your trades here. They are looking to take your trade here. And then price just disregards you, takes out this low, right? Takes out that low, and then let's say accumulates, and then you get that kind of movement. So we are looking at price taking out major liquidity. They are looking at price taking out major liquidity. So what liquidity is that? Is it a previous H4 highs? Is it a previous daily highs? Is it a previous weekly highs or monthly highs? Because this area are heavy in the market. price is most likely to bounce off these areas. Price is most likely to bounce off these areas. Do you understand? Now, I want you to keep this thing in mind. Remember, we are doing two things together. We are still going to the SMT. So I need you to really put this thing in mind. Really put it in mind, because so that when we get into the SMT, you'll be able to merge it together. Now, next will be what? Next will be the time of the day. Now, the time of the day matters a whole lot when you're doing your top-down analysis. I'm trying to look at how I can merge your entries and your analysis together now. And you're just going to forgive me. Just put everything together in your head. It's very scattered in my head, but just continue. Just try and put it together. So time of the day. Now, you want to be taking your trade at what time? Either in London or in New York. You understand? You want to be taking your trades either in London or in New York. That one is weekly. That one is very, very easy. But the days of the week is really where I want to focus at. Now, if you remember the class we did, if you were here, you remember the class we did on open, high, low, close, where I said price is going to do what? Price is going to open, right? We are going to get an open. We are going to get, let's say, a low, the low of the day, right? And then price goes to give us the high, and then price closes. Remember we said that. Now, this happens on every time frame. Remember I said that also, that this happens on every time frame. Now, I want you to picture this in a weekly time frame. In a weekly time frame. If that week is going to be bullish, what is going to happen first? What I'm saying is very specific, and I need you to be very focused. If that week, if we are going to be bullish that week, that means price is going to do what first? Price is going to sell off first. Now, it has been known, or most of the videos I've watched, price usually forms the low of the week within Mondays and Wednesdays. So let's say Monday comes now. Anything you say, and this is the reason why I had to stop swinging at some point. You understand? Because knowing that this thing might not continue this week. You understand? I might just, maybe on Monday I get to my chart and I take a trade on Monday. Maybe I take a sell and I want to sell the whole week. And Monday, Tuesday is sold, only for you to start reversing on Wednesday and taking me out at break even or stop loss. Well, break even. Till I understood how that, till I understood the open, high, low, close. All right, that if that week is going to be bullish, then most likely price is going to do what? Price is going to be bearish first. Price is going to be bearish first. So, I'm trying. I've lost myself. So on Monday, Tuesday, we're expecting that price should go the opposite direction. Remember the smart money, there's going to be, I think there was a video Fort did on accumulation, manipulation, and distribution. So on Monday, most of the time, Monday, Tuesday, we're expecting the manipulation and the accumulation. So we're expecting them to say, where's my brush? We're expecting them to like consolidate first. And this happens every day. And all of a sudden, they manipulate the price. And then the rest of the week, they distribute. And then they close that week. So Mondays, Tuesdays, Wednesday, we're expecting this. So most of you get the reason why I used to say on group chat that today I'm really expecting them to sell because they've been buying all through the week. This is just the basic reason why. And it's not maybe it's a concept, it's just basically understanding open, high, low, close. In that they have to open, they have to create a week, and that week has to have a low or an high first, and then we have to go the opposite direction. Do you understand? Have I confused you? Please, I need a response. Have I confused you?
No, sir.
I don't, sir.
We are good, sir.
All right. So with all the things I've been saying since morning, let's go into the chat and let me show you all the grammar I've been speaking since. So let's look at last week. Last week, what was the date of Monday? So let's look at Monday. All right, so Monday, I think Monday started here. All right. So this was Monday. So pretty much this week we had what? A sideways market. This is actually a range. This is actually a range, but let's see what happened. I would have preferred the previous week because market really trained a lot. But let's do this. Let's use this instead. So if we're looking at this, we're going to be marking out these highs. Or maybe I can even bring out the previous charts that I made on that. I think that will even make my work easier. Let me load up the chart. All right. Oh, great. Sorry, I've been changing the colors of my
screen. We can't see your screen.
Is that the same for everybody? Is it everybody can't see my screen?
No, sir. We can see your screen, sir. We can see it.
Okay, so it's not from my hand here. Alright, so looking at last week, we had this previous week's high. Remember, you're marking that out. We have this previous week's low. Remember? In fact, what I want to do is I want to use this one instead so that I can mark out all of what I've been saying. So we start from the weekly. You're on your chart. Now, you start from the weekly time frame. You mark out your weekly highs. So this was the weekly highs. Then this was the weekly lows. Then you drop to your daily time frame. Then you drop to your daily time frame. Then you mark out your, remember you didn't have this candle. You didn't have this candle as of Monday. I'm not using a page trading view. I've eradicated that out. So you mark this out. This was your previous day's low. This was your previous day's low. And that high still was your previous day what? Your previous day's high. That very candle was your previous day's high. And then your 4-hour candle. Do this here. And then your 4-hour candle. Now, look at what happened that week. Even looking at this already, you can easily see what happened. They did what? They took this previous daily's low, distributed down, and then they started moving the other way. Of course, this week was pretty much a sideways week, so you didn't get all of those trends. Of course, they are not going to get picture perfect stuff. Uh, but if you have to look at this, right? The next thing to bring out is what? From this high to this low, which is your range, right? Now, below there, what can you get? What did you get? You were seeing previous weeks, previous day rather, previous day's low, previous H4 candle that they came into. I don't know if I'm making sense. Of course, this week didn't give me a perfect picture of what I want to explain, but if I had used last week, it would have been much more clearer. And you get to the chart one day, and then you meet something like this, and then it will be as if I didn't teach this. All right, that's the reason why I'm doing this one for now. First, so what else did I explain? So I was explaining that the days of the week, that if you are expecting that week to be bullish, that means price is first going to drop down. So on Monday, we're expecting this week to be bullish, right? On Monday and Tuesday, you were meant to be what? Selling. And then if you are to go to, let's say, the 30-minute time frame, where's that line? Right, that's that line. So they took this H4 highs. Remember, that was an H4 candle close. That was an H4 candle. Time and price now, time of the day. You understand? This, in fact, I don't know. I feel I'm trying to confuse people, but let me do it like this. Let me do it like this. Now, where's the weekly opening candle safe? Weekly opening candle, weekly opening candle, weekly opening candle. I think this should be it. Yeah, this candle opened the weekly candle. So now Monday opened. All right, Monday opened, and all of a sudden, time was not in it. Let's say Asian section kicked in. And Asian section, they went straight to what? They went straight to take this previous day's low. Let's say the previous, this will be last week now, but it's still known as previous daily's low. They went back to take that week previous daily's low. And then pre-London, right? London was not in yet. Price then reversed and then went up to take what? H4 highs. And after taking H4 highs, distributed. Do you understand? Distributed, and then price came back into that range, came back into, let's say, this place. Well, of course, there was a trade here on the 3 minutes, because I know I was a part of this trade on Monday. All right. So over here, they did that their stuff and all of that good stuff there. Do you understand what I just did now? Do you understand the way they did that H4 candle close and all? So they took that H4 highs and they did what? They distributed, and it was in a what? It was in a premium zone. Remember that this gray is premium and this blue is discount. Please, if you understand, tell me you understand, so that I don't feel I'm confusing you. Okay, I
So
think
please, can you take the marking again from the weekly?
I can't take that again. It's pretty much easy. I can't do that. That's very easy. That's very easy. It's just one candle. Please, do you guys understand? I feel I'm alone here.
Yes, sir, we understand.
All right. All right, thank you. Okay, so let's look at another chart. In fact, let's go to a chart that I don't do every day. Let's say USD card. I've not checked USD card in a while. Let's do USD card. So USD card starting from the weekly, right? This was the previous week's low. And this was the previous week's high. Then we drop to the daily, right? So let me try to look for Monday. So it's Monday, this Monday. Right. I think I should grade this a little bit to take. Okay, makes sense like this. All right. So previous daily's high. Previous daily low. Let's say our range. And let's say for all right, so let's go to a 30 minute. Let's go to the 4 hour first. So at this low, what is the previous 4 hour candle? So Sunday 4 hour candle. So this was the previous 4 hours candle, right? This candle, think. So this candle's low. Oh, let's just put that there. So I don't have anything for my candle because then this was that 4 hour candle's high. Then let's see 30 minutes. What happened at the 30 minutes? Now, before the week closed, can you see what happened here? So that was that accumulation. Manipulation. That was that manipulation. And that's the distribution all the way. But that's not what I'm trying to show you. They distributed, came back into this range here, and then they created a new range, low and then high. Now within that low and high, it could bring out a flip. Within that low and high, what did we have there? If you've been following me, what did we have there? I want to see if someone knows what I'm trying to show them there now. Within that low and high, what did we have?
Inducement.
Thank you. Thank you. Thank you. Now that inducement happens to be what?
It follows.
Exactly. Thank you. Thank you.
Liquidity.
And you see that I didn't come to the chat with a chart probably maybe I've studied before to come and show you. We are doing the back testing together now, trying to test what I just taught you. I can't remember the last time I traded USD card. But look at this. So it came into that. Now, if you look to the left, what else can you see here?
IPA.
Yes, you can see an IPA, and you can also see that other block. You can see that. I think this should be it. It makes sense, right? Where is your trade? London, New York, right? Let's say price was coming in this counter trend, high, low, right? Try to they did this manipulation, accumulated lower. They broke structure here. This was the market structure break. They broke structure here. Right? And then they came back. I think they came back the next day. So this was your trade here. Your trade was the next day. Somewhere. And remember that if you are to bring out all of those your what's it called now? Your Asian range into all of these things, you are going to see it clearly. I don't want to bring it out so that I don't complicate things. That's why I would have brought out the Asian range and you would have seen how everything was falling in place. In fact, let me bring it out. All right. So let's say 15 minutes. Now, where's that first one? This was Monday, right? You can see Monday. Look at this was your Asian range low. We took Asian range, came into that IPA before shifting up. Now on Tuesday, where you were going to be taking your trade, what did you see here? Look at this. This was your Asian range. This was below your Asian range. It shifted up. That was a very perfect snipe. Look at this. Break of structure, came back into that last down candle. That's your first entry. Shifted up. This was your second entry. Shifted up, your third entry. So you shouldn't you couldn't have even missed this. Do you understand? Very simple. You just need to put it one after the other. Yeah, I know it might be a lot to take in and how to bring everything together in your head. That's really where the problem is for me because I'm trying to look at how I can teach it that you can understand one after the other. But just sit down, you'll get it. You get it. So that remember I said yesterday that you have to have a plan while you are trading. So now you're planning your trade and you're trying to bring out something. So if you're writing now, I'm writing something like there's an H4 low, and below that H4 low, there's what? There's an imbalance there. And that imbalance is below what? Asian lows. And after that, I'll be looking at them breaking structure to the upside, and then I'll be taking my entry. Like a whole lot of analogy you can form. Do you get what I'm trying to say? In fact, the thing that is making me most happy about this thing is this inducement that is here. Is this inducement that is there? I finally killed the mosquito that have been disturbing us yesterday. Do you understand? All right, let's do
Yes,
one
sir.
more. Let's do one more. Let's do one more. Uh, which pair can we go to? The first person to type a pair, that will be the pair we'll look at. Right. Gold. Gold happens to be the first pair we typed, and gold happens to be a pair that we don't see eyeball to eyeball. So if I do gold and I don't see anything, don't blame me. I and gold, we don't see eyeball to eyeball at all. Like at all. The person that said confusing, don't worry. Just go over the video, you get it. That's why the call is recorded. Alright, gold. Let me see gold. Where's my gold? Alright, so let's do this together. Let's do this together. So what's the first thing to do when you get to your chart? I wish you guys would just be with me. I'm not saying if you shout, I'll remove you. I'm not going to remove you. Stop making me feel alone.
Mark previous week high and
Previous
low.
week high and low.
Alright, previous week's high and low. Thank you. So this is the previous week's high. And then this is the previous week's low.
Previous daily high and low.
Alright, thank you. Previous daily highs and lows. So the previous daily high and low would be okay. So let's look for Monday first. So Monday. So this will be Monday. So this will be that candle there. So previous weeks. Previous line. This candle there. And then we'll go to the page 4. And on the page 4, we're looking for that last candle. So I guess this is that last candle before market closed. Okay. All right. This candle before market closed. Yeah. I like the way gold even moves that week. I don't know if you are saying it already, but I am. So I guess this is the candle. Is this the candle? Is this the candle? I don't care. Well, one of these candles is the candle. Now, you have to look at this alone. What can you see? What do you notice? This week is going to be what? This week is going to be what? Bearish. Now, what did they do first? They opened somewhere here, they went up, and then they started going down. Now, let's then go to the 30 minutes to see what happened. And my chart is already dead. Don't worry, it comes automatically. So on Monday, what happened? What can you see here? This is what? This is that H4 what?
H4
H4
highs.
high. And H4 highs was above Asian range, right? And they did what? They took that liquidity and then they started dumping. If we go on, let's say a 5 minutes here, there's a trade there. In fact, let me show you. I'm pretty much sure there's a trade there. And that trade is in what? In London. Not outside London. I am good. We don't see eyeball to eyeball though, so I really feel I'm lucky with the way I'm seeing it though. So this was the high, low, high. This was outside London. In London, we had this low, we had this high, and then price broke structure. Let's see 3 minutes. this 3 minutes. So 3 minutes, this was still that low. As our price broke this low, right? I guess it made sense for them to come into this place. Personally speaking, I don't think I would have had any trade here because I can't take a trade here, and then my stop loss will be here, and that's too much for me. I'm pretty much I would have looked at this high and this high as what inducement,
Mm.
so I wouldn't have taken this trade here. But the same analogy goes to play. Do you understand? So all what he did was just to make sure before that play happened, it was at specific points. A specific point was what? In fact, you don't even need to disturb yourself with the daily highs and the daily lows. Of course, you can put all of those ones as targets. I feel you can put them as targets. But what you need the most is what your H4 highs and your H4 lows. Looking at them to be above your Asian range. And you can see how this was so beautiful because they came into what? They came into this IPA here. Look at this imbalance here. I mean, that was beautiful.
Sorry, excuse me, sir.
Yeah, I'm with you.
When marking the H4 highs and low, are we only going to take the last candle of the H4 before the day close?
Yes. And that's before the day of the week you are trading in. If you are trading in, let's say, Tuesday, remember that market is going to happen at 0000 New York time. So the last H4 candle before that 0000. I
Okay,
don't know if you,
noted. Thank you.
yeah, not every, because you are trading this basically currency. I know a lot of people trade synthetic. I'm sorry for being biased, but I don't do synthetic, but I'm pretty sure some people can just backtest and figure it out. But I don't do synthetic. Let me see. Trading view dot binary at trading view dot binary dot com, right? Yeah, I think that should be it. Let's see. Well, we can do this on Tisha. And this is the main reason why I hate this thing. It doesn't have the weekly time frame. There's just so many disadvantages to this trading view, this binary trading view for me. Like, there's no time and price, there's nothing to really look at. And some people might be even looking at buying here. And I cannot do because I don't know what the weekly perspective is. It seems to me that they swept these highs and now they are distributing and they are going to be targeting these lows. That's what it seems to me, though. Okay, we are now analyzing. Well, see, don't let me do this thing. Let's go to the next one. I've spent about an hour on this already. But guys, do you understand what I just did on the top-down analysis? How you walk your way from the highs to the lows. Do you understand?
Yes, sir.
All right, thank you.
Yes, sir.
So let's go to SMT. SMT, which is the one everybody has been pressuring my life for all these days. SMT. Okay. So I can clean all of this. In recent time, I've not been taking any trades that I don't see an SMT on. Oh, come in now. I hope I'm not boring you.
No, sir.
And the fact that people are not even responding is the only one, is the thing that is even making me
No,
sad.
sir, we are good, sir.
You don't want to disturb the record.
Following up.
So SMT, also known as divergence, also known as smart money to SMT. All right. All right. Where do I start SMT from? Now, divergence is basically correlation between two assets. And you see, SMT, I think divergence works on what's it called now? Works on synthetic as well, but you have to use, I think, either an RSI or a moving average or something. Man, I don't like that. That seems to me like a scam. That's the reason why I don't like it. That's the reason why I don't like it. Um, I like SMT in currency because you are looking at two pairs and you are so sure of what is going to happen. You are looking at two pairs and you are so sure of what is going to happen. Like you are so, I mean, you are like, it's more like 100% for me. Like that's the reason why I can risk with confidence. You get, and basically because I don't trade so many pairs, trade just EU and GU. That's the reason why it's more beautiful for me. So SMT basically is very simple. Is when one pair is making a high and the other pair is not. So let's say this is EU and then GU. I mean, in the last bootcamp, we went over this. I think this was where Mr. Emmanuel taught on SMT. He did a very good job. If I were you, I'll even go back to that video because I'm pretty sure he explained this more than he explained it more than I'm going to do. So when one pair, all right, is making a low and the other one is not. This basically, I think they used to call it what? A crack.
We can't hear you, sir.
All right. Sorry about that. I'm so sorry about that. My internet misbehaved. All right. So I was saying this is what they call a crack in correlation. Now, I'm not yet to get to do plenty. I just want to show you the way it is. I just want to show you the way it is. What's going on? Why is this thing off? I'm coming, guys. I don't know what's wrong with the network. I'm sorry, guys. I don't know what's going on with my network. Please be patient a little bit. Sorry, I'm trying to fix my network, my internet. I don't know what's going on with my internet. All right, I guess it's going on fine now. Trading day is loading. So sorry about that. All right, so sorry about that. All right, sorry about that. Let's continue. I'm so sorry about that. That's heartbreaking. So I was saying that this is like a cracking correlation, and I was saying that I'm not here to explain so much grammar about it. I'm just here to show you so that you can understand. Now, one basic thing you must always look out for in SMT is now one asset takes the lows, or say sweeps liquidity, and the other one does not. Well, let's say in bullish conditions, or in bullish conditions as it were. And then the opposite is the case for bearish conditions, all right, takes the high and the other does not. Now in this case, right, now it is generally said that this one that did not take the low, this one is the one that you should take a trade on, because this one is the one that is more volatile. I hope everybody can hear me. Yes, I think so. Now, I'm not a fan of which one to trade and which one not to trade. My own is just I want to see an SMT. Sometimes it might be EU, sometimes it might be GU. My own is I just take the trade. I don't care. And there are many assets that correlate. Like I think it was even on Friday that one person was telling me that GJ and EJ they correlate, that they form a divergence with each other. I didn't know. As much as I don't know if it is correct or not, but I don't care though. And the reason why I don't care is because I don't trade it. I know Bitcoin and Ethereum they correlate as well. You can look for divergences on it or SMT on it. I know gold and silver does. Which other one that I know of? Yeah, NU and AU. NU and AU. But for me, I'm a classic, I'm a die-hard person on EU and GU. So let me show you how it works. Of course, I'm looking at it on a 5 minute, because of course it happens on any time frame, but because I'm taking a trade, I'm day trading, all right. I'm pretty much just interested in it on the asset I'm trading on, because I'm looking at taking a trade at that particular point in time. So that particular point in time that I'm looking to take a trade is the time that I'm looking for the SMT. So I'm going to be overlaying GU with this now. I'm going to be putting this on candles. Alright. So GU is the one above, E is the one below. And the fact that it's even red on this thing, I don't like it. But now on Monday, after all our TDA and everything, you're about to take a trade. Alright. What did you notice? Now look at this cracking correlation that happened here. So this took this high, right? That particular point in time, and this made a what? This made a low. All right, can you see that? Now look at the bigger one here. After that, this made a high, this made a low. So for people that were asking me why I really took this trade that day, you can see how SMC played a function in it. This took the high, this made a low. You understand? Are you guys understanding me at all, or I should just send a call and go and sleep?
Yes, sir. I understand you, sir.
I'm
Look
following,
at
sir.
this one. This made a low, right? And at that particular point, look at GU. GU was busy doing what? Making the highs. I think it won't continue from here. Continue making the highs. Now, me, I don't really look for all of these things. I'm not interested in all those things. The one I'm really interested in is at that particular time, I want to take that trade. I'm looking for the SMT like this. This made that high, this made that low. And I'm looking for this at specific time. Specific time. I'm not looking for them at Asian section or no. At that time that I'm about to take my trade, that's when I am looking out for it. Now let's see again. Let's look at Tuesday morning. Let's see. Did we sell on Tuesday or did we buy? Who remembers? I think we sold. I think we sold. I think we did. Yeah, we did. So look at this. You did diverge. Did we diverge on Tuesday? From what you can see, did we diverge on Tuesday?
Yes, sir.
Alright. So this made a low. You can see. Now some people might be asking, am I going to consider the body or am I going to consider the week? Anyone you consider, you are fine. Just make sure you see them take the highs and the lows. You are fine. That was Tuesday. Comprehend? Yep. Let's look at Wednesday. They diverge on Wednesday. at the time you were about to take your trade. Let's say in this point, this was in London, probably maybe they didn't diverge here, kept on making that low. But at the point whereby price was going to reverse, can you see the divergence already? I can. I think they did here. They did not. This did not diverge. Or did it? Or I'm the one not seeing it. No, they did not. So pretty much I might not have taken this trade. Well, I might have, shall I don't know. But my SMT is really the play for me. On Thursday, which was the most painful for me, that I was waiting for price to come into this other block as it were. Did they diverge? Something they did. But price moved to the upside aggressively. And then let's see Friday. Friday, did they diverge? Did they diverge on Friday? Right? So 5 days in a week, they diverge on Friday, you have your trade. They diverged on Monday and Tuesday, 3 days in a week. So 3 of last week of this previous week, they did diverge. So 3 days you had your trade. Do you understand the SMT at all? Do you understand what you're looking out for? I remember I told you that it did not come to me. Remember the assignment I told you that they gave me? That you go and look for 20 divergences ahead. So probably maybe that was what made my eyes get a whole lot clear to see it, to spot it easily. But I'm pretty sure if you do a lot of that back testing, you're going to see it. Let's see. The reason why I don't like this S&P now, S&P US 30 and Nasdaq, they are correlating pairs. They used to diverge as well, but it's three assets. And looking at three assets sometimes can be so much stress for me. That's the reason why I barely trade it again these days. But I'm having plans of returning because I'm still checking. I'm still checking. It seems to me that I don't really need US 30 in my divergence. My Nasdaq and my ES mini, that's S&P, makes more sense to me. They diverge. All right. I haven't said all of that. Any question? Okay, someone is asking, can you check this SMT on synthetic? Well, like I said initially, yes, it works, but I think it works with RSI indicator. It works with indicator, either RSI or MACD or I don't know. Let me see. But yeah, I barely trade synthetic, so I don't know which one to use. But let's see, crash and boom, or big 75. So big 75 one, yes. Let's say big 75. My national cake. Let's see, 15 minutes. Set chart. All right, so let's bring out an indicator. MACD. I know back then I used the MACD. Yeah, this MACD. And then the setting for my MACD back then was what, 5812. Is it 5812? I'm coming. Let me check. Let me see if I can quickly search for the MACD setting. Um, um, um,
310, 16, I think.
all right, 310, 310, 16. Thank you. What that? Said 310, 16. 3, 10, 16. Well, I'm not saying you should take my word for it because me, I don't used to use it though. So I don't know. I'm just trying to check if I can see it. So let's see. Looking at this loop. All right, looking at this, you can see. Look at this here. This made a low. This made a highs. You can see that. Now, are you considering the histogram or the line chart or the lines? I guess you are considering the lines. Yes, you are considering the lines. Let's see. Yeah, I can see another one here. From here, this made the highs. And this made, the fact that there's no timing in synthetic is annoying for me. Okay, I guess there are a lot of questions here now. I'll attend to the questions shortly. So you get the idea of the divergence. So let me start attending to the questions. I like the last one first. Sir, how do you set your stop loss for your divergence? Well, my stop loss is usually the interim high. I don't know nothing serious. Let's look at Monday now. For my Monday, so the trade I took after spotting okay, I think I can delete this one now. I don't need it again. Remove. Where's the remove? All right. So after spotting my divergence here, all right, this was my trade. I just set my limit somewhere here. Yes. My stops still at that high. Nothing serious. Same idea. So my stops is usually just at the highs. All right. So I guess I answered that. Sir, how did you bring GU on EU? Very simple. Near this EU, you can see this plus button here. Click on the plus. Look for the assets you want to overlay. That will be GBP USD. And then looking at this GBP USD, you then click on this new price scale. You click on your new price scale, it comes on it, and then if you double click on that line, it brings out this, and then you switch this to whatsoever you want, set it to the colors you want, and if you want to adjust it, you can adjust it here. For GU, you can see the price scale for GU here, and then you can see the price scale for EU here. You get, and if you want to remove it, click on it and click remove. Very simple. Maggie, yes. Can EU diverge with DXY? Yeah, EU diverges with DXY. EU, GUI. In fact, it's the three, but I just discovered that ideally you don't need to stress yourself too much. Once you see it on EU and GU, then it's going to be on DXY. I don't like complicating my life. All right. What TDI? TDI is what? I will be. I don't know what TDI means though. Does that mean when you are buying in one, the other one, when you are buying in one, do sell in the other one, or what do you actually mean? Okay, what I actually mean is that if I'm going to be selling, that it informs my selling my sales. I already explained. I just explained it now. You see, I was doing it with EU and GU, and you can see that both of them were selling. Not that one was buying and the other one was selling. No, I think what you're even saying is relative strength analysis, whereby if one is buying, then you should be looking at selling the other ones. I think I'm not doing relative strength analysis, just pure divergence. All right. Traders dynamic index. I don't even know what that means. Alright, one thing I observe about divergence is that sometimes one of the correlated assets might be lagging and then the other ones will later catch up. Exactly. Yep, exactly. Please, after identifying divergence, what influences the ones you will trade? Well, like I said, the one that made the low, let me go to my chart real quick. If you get the divergence like this, let's use bearish this time. High, low, high, break, and then let's say you have this high, low. Now, it is stated that this one that did not create the high, this one that did not create the high, should be the one you should take the trade on. This one that did not create the high should be the one you should take the trade on. And then when you look at the bullish part, let's say high, low, break, and then high, low, this didn't make the high. And then this should be the one you should trade. I think so. Now, like I said, me, I've seen times, in fact, times without number, I've seen it whereby this one that you are meant to trade actually is not the one that is more volatile. So me personally, because I like EU a lot, I just take EU. And depending on my spirit as at that point in time, I might just take the two. You understand? If I answer, Sulaiman. Yeah, all right. How do you confirm a valid divergence? Because it prints on real time and sometimes visible divergence appear. I mean, it's simple enough. I already answered that. I said I'm looking for it at timing. Timing. Look at this. This happened in London section. You see, if you don't get this thing about timing, you might fail. You might get it wrong. I've been using divergence for a while now, and I've seen how that once it appears on in London, you're afraid to take it. Don't take my word for it. Backtest. You backtest it. Backtest it. Honestly, I just need you to backtest it. Um. Okay. Man, I don't understand this thing. You posted this TDI. I don't do all of these things, please. So I might skip that. If you take one or if you take the two, that means you are having two entries. Yes. EU and GU at the same time. Yes, 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 yes. I take the two at the same time. But then throughout this week, I was seeing the divergence on both, but I was taking only EU. I didn't take it. I didn't take any trade on EU on GU this week. I just vibe. It's in the flow. Anyone that comes to you, just take it and be rest assured. Be rest assured. Man, it's almost as if it's my masterclass guys that were enjoying this thing. So I spot it, we say it, and we trade it. Alright, I guess that would be all from me. Let me stop the recording now so I can talk freely.